Capitol Hill is busy in the crypto topic, and of course today we're going to be talking about whether or not they have crafted a path forward and break it down for you guys. My name is Paul Barron. Welcome back into Tech Path. I do want to thank our sponsor today, and that is Tangem, a great place for self-custody. You guys can join the self-custody crowd by going over to tangem.com, get in on your own secure crypto and hardware wallet. And it's a card. It looks like a little credit card for you guys that maybe have never seen one of these. Works in conjunction with an app on your Android or your iPhone. Very easy to set up and super secure. So easy, it only takes 3 minutes to set this thing up. Very simple to order as well. Just hit that Get Tangem button right there. That's going to get you into the 3-card set. You guys can float around. Get the black one. You'll love that one, the stealth card. And it's super simple. Ships right to you. You guys can activate them almost immediately. Get started in self-custody. Get your coins and your tokens off of these exchanges. All right, let's go into a couple of topics today. One, of course, as you guys know, we had the monetary policy hearing with Jerome Powell. We touched on that one yesterday. This had an extension, kind of a part 2, and we'll also get into the one that I think was most important, and that was this one right here, Golden Age of Digital Assets, the path forward. This had a lot of people in it. Kraken was there, president of Crypto Council for Innovation. You had a ton of people. Of course, the guy from PayPal was there. All of this was potential for doing something good. And there's some interesting things that came out of this that I think you guys will want to watch. Let's go to the first clip, have you guys take a look and see what you think. This is where Jerome Powell is talking a little bit more around crypto banking. Take a look.
Any extra things that we can do to protect the traditional banking system?
We don't want to get in the way of banks serving perfectly legal customers as long as they understand the risks.
Are you speaking to custody?
Well, custody is more, the second thing is undertaking activities on their own. So I think we need to be mindful that many of these activities can very well be done inside of banks, and custody may well be one of them. In fact, in Fed-regulated banks, there are lots of crypto activities happening now. They've just happened under a framework where we made sure that the bank understood and we understood exactly what they're doing.
Right.
All right, so there you have it. I mean, that is Chair Powell basically saying, yes, crypto activities within banks. It's just a scenario that, much like any other AML kind of scenario, anti-money laundering scenario that happens in a bank, crypto should be no different, treated like any other asset. So that I like, and it's a good focus. Now, of course, you have to think about these hearings and who else would come in on this. This, of course, is going to get into Maxine Waters. She gets on the whole data privacy thing, and I'll comment after this clip, but take a look.
Would you like to tell us today that you won't let Doge into the Federal Reserve? You going to let him in?
I don't have anything for you on that.
And the people of this country are being violated because all of our privacy is being taken up by Elon Musk and Trump, and we don't know what all they have on us, our bank accounts, everything that in our lives. So I want to protect it in the Fed. Mr. Powell.
I find it very ironic that my colleagues on the other side of the aisle and the ranking member in her remarks take a sudden interest in data privacy. They worked very hard to force banks to report the financial transactions of individuals at $600.
All right, so data privacy, Maxine Waters kind of going out both sides of her mouth there. Obviously, you have to look at social media. There's been a lot of data privacy issues, credit card companies, banks, you name it. So this kind of scenario that they're playing into, I think, is really more of a posturing position, both for the Democrats, because they realize they don't really have control of what's going to happen in Congress. And of course, that all leads into another topic, and this was about Dogecoin and Doge, the Department of Government Efficiency. And this, of course, was by our friend Brad Sherman. Take a look.
But I want to focus on Dogecoin, and Bitcoin went up 22%. OneCoin, Dogecoin, went up in 1 week 6 times as fast as Bitcoin. And then they named a big-time department after the coin. Assuming that Dogecoin isn't a security, is it subject to insider trading laws?
No, it is not.
Trade on that, make a lot of money, and they say that Musk isn't smart.
If I were at the CFTC today, 2014, someone came to me with the Dogecoin instead of Bitcoin, I wouldn't have declared that a commodity. Okay, it shouldn't be traded as a commodity.
All right, so you can see the scenario behind this. Still not a lot of education around what's happening in the crypto market. So we have some work to do, in DC. Hopefully these lawmakers are going to get to a point where they understand this. Elon Musk himself is still owning a bunch of Dogecoin consistently. So it's not as though this is a play on it. And of course, I think Doge, this is just a serendipity situation that has occurred before. So I don't know. This is one of those things that, again, at Congress, doing Congress things, which is most of the time not getting anything done. So they have to always pick on something, because the Democrats are in that position right now where they are in a little bit of a pickle. And guess what they go after? Take a look.
Earlier this year, Trump launched his own cryptocurrency meme coin.
He just started his own meme coin.
It was a scam.
The Trump coin pumped up to $75 and now dumped down to $17.
When Trump launched his own meme coin, right after Trump's token crashed, I asked, what is it? They said it's not an investment. What do you think about this?
I mean, look, this is like, paying to join a fan club. It's exactly the kind of behavior we should be trying to tamp down.
Anybody know what it's trading at today?
Well, I think value is in the eye of the beholder, and a lot of these are sentiment-driven assets. Right?
Fine. I see you all smiling. We'll refer to them as fecal coins for the purpose of this hearing.
All right, so, when you look at that, you got to remember, meme coins are just that. They are fun. And for the most part, it creates a community, and that is most of the time around any other collectible that's out there. If you think about that, here's an example of the Fecal coin right there, of course, jumping up. So unfortunately, we missed that one. Oh, well, it's just one of those things. And of course, it never fears. We're always going to get some kind of meme coin action across some of these statements out there. Sherman goes on a little bit further. Now he gets into a little bit more interesting discussion, and this is about stablecoins and what he thinks about them. Take a look.
The Genius Act. I'm always worried about anything that comes over from the Senate with the title genius in it.
How's a stablecoin different from a money market mutual fund? Now, it's cooler because it's called a coin.
Today, stablecoins aren't stable.
What does a stablecoin tied to the US dollar offer the investor?
The way I think about stablecoins is they should not be an investment vehicle. They should not pay interest. And
not even the little bit of interest I get on the money market?
Not to start out with. I think we're better off, restricting
So it's worse.
Thank you, Chairman. That was a very interesting dialogue. The question could be, why did they decide to make calculators when an abacus can do?
This is the thing that we're dealing with. I think, again, it gets into these scenarios where many of these Congress members are trying to protect, I would say the banking industry, because remember, most of stablecoins are paying yields in excess of that of what a normal bank would pay on your US dollar. If they get to that point where banks are going to have to execute on that kind of expectation by the American consumer, that's going to put some pressure on. Now, remember, there's been many companies that have started to launch stablecoins. PayPal is one of them. Their CEO was there today, and he had a perfect chance to really kind of win the audience over, and he kind of missed the mark. Take a look what he had to say.
The reality is, do we have that many migrants using crypto or stable coins to transmit remittances?
I don't have data for that.
Do you have any data on the breakdown by income of the consumer that does use stable coin?
I don't know that we have that data, but I can consult with our team.
But the reality is, unless you're really very rich, you're not doing any of this.
All right, I wish he'd have been a little bit more prepared, because if you just do a little bit of research on this, 2.4 million potential Latino migrants right now our cryptocurrency uses. Total stock of to transfer around 740 million annually. So it is being used, of course. Yes, it is working within those ecosystems. PayPal is surprising to me. And we've already seen this in other ways of it being used. This, of course, was during the Ukraine war, and how much of this was still being transmitted via the stablecoin Tether. And that was before we really started to see the strength of USDC. So even with that, though, you're talking about almost 212 million that got into that. If you look at that compared to, when you look at traditional fiat, of course, you can kind of see what was aid to Ukraine right there. 106 billion, but humanitarian support, only 2.8 billion of all of that support going in it. So the percentage-wise of the crypto went into the market to support the Ukraine war was significant in comparison to what we've seen on these humanitarian. Remember, all these fees are still being transacted through SWIFT, banks, all sorts of money handlers out there that continuously take their slice of the pie, which is what crypto really eliminates a lot of. So that again goes back to the point of what I'm getting at. Now, Richie Torres had a very good statement on this. Richie is a Democrat, though he is one that understands a little bit better of what this means to innovation and really the financial markets. Take a look.
What is the cost of transferring money via the conventional payment system versus the crypto or stablecoin payment system?
But information coming from sources like the World Bank would put the average cost in the range of around 6%, with a target of, I think that the desired target for the World Bank is to bring that down to 3%.
The World Bank has a sustainability development goal of 3%. What is your cost?
We don't charge any transfer fees.
So it's zero when it comes to the transaction fees, and then if you factor in the spread for the foreign currency exchange rate, what would it be? Is it less than 3%?
In many cases, it will be less than 3%.
All right, so you can kind of see the point that is starting to roll in on this. And remember, there's a lot of things that, have been attempted before by the federal government. Remember, you guys probably remember FedWire. I'm sure you remember that. The whole idea is that at some point it was going to make, being able to transfer funds so much better. And of course, Jerome Powell kind of debates that completely. Take a look at what he had to say.
Access to FedWire could play a role in radically reducing the cost of remittances and payments for the lowest income Americans. What is your position on expanding FedWire access for the purpose of reducing the cost of remittances and payments?
FedWire is really between banks. These are very large wholesale transactions. It's one of the world's most important, if not the most important, financial market utility. I don't think we're looking to open it up to, to retail customers. I think faster retail payments and particularly cross-border payments are a subject of a lot of work in the international sphere, and I think we all understand it's important to lower the costs and the risks of those.
So right there you have it, FedWire done, never going to make it to retail. This is going to be a factor that again goes toward the strength of crypto because that will alleviate a lot of these kind of fees that we're talking about going forward. The other thing you have to worry about is this whole self-custody scenario, because even though Congress is now mostly in the Republican camp to where they control the House and Senate and being able to actually get some of these bills passed, remember, there were a lot of bills that came in with the caveat of self-custody, being able to hold your own crypto, being banned. Of course, this is them still going after it. Take a look.
That are owned by your customer. Yeah, I'm not worried about your customers, the people you KYC'd. I'm worried about people that are out there on the dark web. For the record, say exactly how you can guarantee that when you bring on a crypto asset, that value has not been used in an illicit transaction.
They can be transferred on self-hosted wallets, which raises a lot of issues of evasion of sanctions and financial crime.
If you don't protect self-custody, you essentially don't have, all you really do is change which intermediaries are involved. And some of the arguments that I would hear from the other side of the aisle was there was worry about fraud, so it couldn't be used. Yeah, I'm just before I got here, a small town lawyer from rural North Carolina, but the best analogy I would know would be someone saying you shouldn't use a $20 bill because there might be a counterfeit one out there somewhere. The reality is, in anything you have, there's going to be fraudsters and criminals who try to come in and abuse the system.
So you can kind of see there's still some debate out there, but I think this is all coming down to a scenario where it's posturing, trying to position against it. I doubt that there's going to be any of the voting Republicans that would most likely pass these bills sway to the other side. Now, could there be? Sure, yes, there could be. But I think the frustration that everybody is dealing with is they just want to get a bill through the House and Senate and they want to get it done now. Here was Kraken talking about just that. Take a look.
So I know there's been discussion of let's wait, let's move stablecoins first, let's wait on market structure. We cannot wait any further. And Congress doesn't need to move a market structure bill that solves every single problem in the ecosystem. We are talking about the most basic foundational rules of regulating centralized exchanges.
All right, and you can kind of see it. They're just saying, listen, guys, the framework's in place. I think what we're going to see here is most likely the administration starting to put some pressure on to get some of this through. So that's what I'm looking for next is some of these hearings that actually will be a path forward, some rather than these posturized hearings that are just basically a lot of talking points and people that don't know what they're talking about, nor do they understand crypto to an extent that it needs to be understood, especially at our nation's capital. So we're going to cover this and much more, so you guys stick around on the channel. We'll try to get back to that. Of course, you're not in the Diamond Circle. Get in right now. It's a great place to get additional content. Also, join our own Telegram group. We leave a link down there as well. You can reach me out there on X, @Paul Barron. We'll catch you next time right here on TechPath.